Top of the morning, top of the morning. Back at it again with another one. And today we're looking at the NASDAQ. This is like take two. The first take, my flu was kicking in like crazy. I've been sick for the past couple of days. Um, but we're coming back. We're coming back. It's giving me time off from work, you know, mining fiat to give some attention to the charts, man. It's been a while, and it feels good to still be in sync with her, even though it's been some time since I've given her attention. So yeah, we posting or building on from that first day, from the longest or the first trading day post the longest U.S. government shutdown. Today it's currently Wednesday. It is the 19th of November. And yeah, man, as per the previous video, we'll start off with the setup we're looking at for the week on the daily time frame. That's where the setup was from. It's been very nice. Just being in direction with order flow. The setup from Monday. This was Monday's candle. Let me just Alt V that. Alt V. Cool. We're looking at this chart to our left. This is what we're looking at, right? So Monday's candle, we managed to get in sync with the order flow. Couch is short there. The short we caught was somewhere around about this area. As we scale down to like an hourly to lower time frame, you'll see if you didn't see yesterday or the previous uploads video. But Tuesday went down. Tuesday is the position or the paper trade we took. Not really took, but observed, right? We didn't put in any live trades yesterday. It was just the paper trade. In this candle, as it was printing down, the draw was still towards previous week's low. We didn't yet have a candle closure below previous week's low. We got that yesterday. And today, or with the current like daily candle that's printing, there's also something you'll note. Same pattern, crazy, but you'll see just now. This is literally all that we need, bro. It's not none crazy. But anyway, that's the setup. Moving from it within context of this current range high and that current range low. So last week's high and last week's low in context of that range, right? So always have a range that you work in. Range or context, that's what the external range liquidity pools are and what's the internal range. And so since we're looking at a continuation, in this instance, we want to see price hit the internal and go to the external. Hit internal, move to external. That's for continuation. If we're a bit frisky and we're looking for a reversal, we then look for price or signs of price hitting an external range pool of liquidity. We'd look for an entry signal and then we'd ride it back towards an internal range pool of liquidity. If we're feeling a bit cheeky doing a reversal, but so far for the past 3 days, we've just been getting continuations, and I'm gonna go through yesterday's paper trade continuation that we saw, and also one that's currently setting up or playing out right now as we speak in real time. So now that we looked at the context we're in on the higher time frame, so within the light of last week's high and last week's low, we are currently riding price as it's moving from a pool of internal range liquidity towards a pool of external range liquidity. We've just gotten to that external range pool of liquidity that we're looking at or targeting, which was last week's low. We're now looking to see what price is going to do at this area. Now, scaling down to a 4 hourly, this is where we at. Of course, you can see we hit it there, and then we've just been going down, and now you can see prices like chopping up, consolidating. But within all of this chop, it's been giving us nice setups. Let me go to the hourly and show you now. Hourly time frame. Yesterday's upload, you saw what happened, why SMT, etc., going down. You can see it's actually like melted quite nicely though, quite nicely. At the time when we were looking at entries here, the draw was this imbalance here of a value gap. She came down, hit it, range high, range low, internal range, pool of liquidity, slanted, went down. Granted, this wasn't really like, you know, put down there, looking at there. You know what I'm saying? It was like kind of in discount, but that's neither here nor there. Pushed down towards that external, and then we had a new range, right? Then this was yesterday's situation. So see how similarly to on that higher time frame, right? We had the range that we were looking in context, and then we had our external pool or our external range pools of liquidity, and then we had the internal range. And then for the continuation thinking, we want to see price hit the internal range pool, and then we ride with it down towards an external range. That's the higher time frame order flow we're in currently. Now we were just going on to a lower time frame to look for the same shandies, but on a lower time frame since price is fractal. If we have an order flow in one direction on a higher time frame, and on a lower time frame, we look for a setup or trade with the same order flow or direction, it tends to work out quite highly in our favor. And that's exactly what we had yesterday. So at the time, price did its thing. It was now coming up, and I noticed these 2 wicks making relative equal lows. Before this happened, I had that marked out, right? Let me just make that a bit bolder so it stands out, or even let me make that red so that you see what we're looking at, right? Just hold up. If you hear this through the mic, I'm sorry. Yeah, if you heard that through the mic, I'm sorry. But anyway, we were looking at this, right? Cool. I'll just put the fib to show you the range that we were operating in on on a lower time frame. That's the hourly. That's the high of the range, and obviously that's the low, right? You can see with the fib, that's what we're looking at. I'll make that 2 so that it stands out a bit more. So you can see this red line lines out the halfway point of this range. So from that high to that low, that's the context of the dealing range I was looking at on a hourly time frame. This was within this overall movement, right? So I had the higher time frame push on my side, and I'm looking for a similar setup or structure in the context of getting a continuation on a lower time frame. Yeah, easy peasy, lemon squeezy. High, low, buy side external range pool of liquidity, sell side external range pool of liquidity. That red block is that fair value gap. That's our internal range pool of liquidity. When I was looking at the chart, price was around about there. So I put that thingy there just to mark that out. And then also note how it's hitting that golden zone. Hint, hint, nudge, nudge. Order block there after like rebalancing in imbalance. Very strong resistance level. It's just a lot of nice things coming together, you know. Hitting that, it started to melt towards that buy side or that sell side pool of liquidity, pierced right through it, and then reverted back up. I had it marked out, risking 141 points. Target was 283, 283 points. That was a 1 to 2R, done and dusted. Just for curiosity's sake, would it have given us a 3R? Just to see here. Yes, it would have given us the 3R. Good to just note that. So, range and context, internal range pool of liquidity in premium. We are moving with the higher time frame order flow, and we had a solid draw. Easy peasy lemon squeezy. Assuming we enter the trade then, it would have been roughly where's the measure thing again? I think it's I believe yeah, let's say like a good make it on this candle here. Say 6 hours. A good 6 hours in the trade. 283 points. But obviously risk management, keeping it consistent. This is on the hourly time frame, by the way. I've been noting like this is still recording. Cool. I've been noting like hourly setups, hourly entries, daily setups, hourly entries, then 4 hourly setups, 5 minute entries. You know, I'll iron it out some more. But that was Tuesday's one, and then Wednesday's one, low key same vibe forming. So I'm just gonna remove that. Just gonna remove that, and I'm just gonna remove this here, just to show what we're looking at right now, right? So Nasdaq on the hourly time frame. Context: we are looking at this low to this high. Got it there for us. Cool. Buy side, external range pool of liquidity. Sell side, external range pool of liquidity. I put a fib on the low to the high, and this red line here, that's the 50% level of the range we're looking at, right? Above that, I want to find PD arrays that will allow me to sell. If you look above that, you can see we've got that fair value gap there. I'll just mark that out since it's the closest one we have with the red, right? We also have this inversion fair value gap there. I'll just put that out there for intra-psych. For intra-psych, you know what I'm saying? And then I'll mark that out as like, yeah, for intra-psych. So you can see in context of the range we're looking at here, low, high, 50% above that. That's why if I'm looking to sell, in context of the higher time frame direction, right? It's bearish. We're moving from that higher. Let me just show you. This is the context we're in, right? We're moving from there, going down. We're still in that direction or that order flow. Granted, we're observing what it would do in a premium area, I mean a discount area, right? It's now more, let's just do like that, right? We're looking at the chart to the left. We're below that 50% mark. This is where, relative to previous week's low and previous week's high, that's what we're looking at. We were looking or were selling all the way down, and now we're in a discount area, deep discount. Actually, this would be a good time to buy, but we're just watching to see if the fractal will complete itself in this condition. Cool. That's the context. We're going downhill. We're looking at it now on an hourly. Same fractal, low, high, above the halfway mark of that range. We have an inversion fair value gap lining up with a bearish fair value gap. Let me clean up the chart. I'm going to remove the inversion, but you see where it is, right? Just take note of that. What does price do? It comes up, hits the halfway point of the fair value gap. Note how it just stays in that zone, then it starts selling off. I'm expecting it to completely now go down. I'm expecting it to hit this pool of liquidity and then make a reversal from there. It's currently 106, 1 o'clock in New York, you know? And yeah, I'm gonna scale down to a 15-minute, take a look further. Okay, might reverse. I see this engulfing candle here. This might be a reversal point, but I don't know. We gonna see. Accumulation, manipulation. This could be the distribution now. So this could be where it buys and then pushes up from. But like I said, I don't know what's gonna happen. I'm just observing to see if this hourly fractal plays out. We're gonna see. Updates to follow, but that's the current situation now. But main takeaway that I just wanna express or communicate out to you, bro, is moving in the higher time frame or the flow direction. Look for ranges to act within on a lower time frame. You can see this hourly setup that we've been like looking at, ever since back then. It's really playing out nicely. This range, particularly, this one here, that low to that high, obviously that's a range, and then within that range, there was a smaller one there. But like, just those types of things, bro. Just look for the ranges or fractal it out in a larger one. Find smaller ones that you can take bite-sized chunks out of, and then just scalp those, and then chow, 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 chow. You can swing, but you know what I'm saying? In outs. You know, taking advantage of these things, bro. Can't go wrong. But more to follow. Thank God for the skill. And yeah.